Association of Broadcasters.
Discover the fish and farm market at the Boston Fish Pier. Open every Saturday from 11 a.m. to 3 p.m. in Boston Seaport. From fresh seafood to juicy tomatoes and sweet corn to grab-and-go options, indulge in the peak of summer's bounty. Support local farmers and enjoy the freshest ingredients all summer long. Sponsored by Mass Farmers Markets, a nonprofit dedicated to championing farmers markets across Massachusetts. Find a market near you at massfarmersmarkets.org.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we've got a guide this month titled Frequently Asked Questions About RMDs. Mike, RMDs, or Required Minimum Distributions, what are they exactly?
Yeah, it's not something you really think about when you're 45 years old and putting money in there, but eventually the IRS forces you to start taking the money out. And so an RMD, a required minimum distribution, is an annual amount that you must start taking out once you hit a certain age. It used to be 70.5 for everyone. Now it's as high as age 75 for some folks on their traditional 401k and IRA assets.
So something like a Roth IRA for an individual would not have a required distribution.
Yeah, just one of the many benefits of a Roth IRA is that lack of a required minimum distribution for the initial account holder.
When you talk about how to figure out how much your required distribution is going to be, how do you determine what that amount is once you hit the age at which you qualify for them?
Talk to a professional, I think, is my answer, because it is pretty complicated. But the IRS publishes this giant table about uniform life expectancies, and then you have to, compare your age to the table, compare it to your year-end balance, and come up with that dollar amount. And that dollar amount is the one that has to be withdrawn by the year end of that year.
The guide is titled Frequently Asked Questions About RMDs, and the way to request it is by calling 800-393-4001. Again, the guide is titled Frequently Asked Questions About RMDs, and that phone number to request it is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have debt destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
This Veterans Day weekend, help honor all who have served this country. Join us on Saturday, November 9th for the 9th Annual Disabled American Veterans 5K Boston. It's a run and walk to support the DAV Department of Massachusetts. Register now at dav5k.boston.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Good morning. Happy Tuesday here on the Financial Exchange, day after markets hit new all-time highs yesterday. And a lot of different items to cover this morning. One, you had several different Federal Reserve members speaking yesterday, so we'll be covering some of the commentary from the likes of Austin Goolsbee and others before dozens more, maybe a dozen more, speak later this week. You had consumer confidence come out at 10 a.m. this morning. But we're starting off the show with the, I guess, useless warning of the week.
I like where you're going with this.
Yeah,
I was on a similar page.
Useless warning of the week, which, happens to be totally true. And there's just absolutely nothing that I think you can do with it. But JPMorgan CEO Jamie Dimon, now off his warning about economic headwinds and hurricanes on the horizon, he needed something else to get everyone to worry about. So is now warning that geopolitics is getting worse. And, quote, geopolitics is getting worse. They are not getting better. And considers it to be the world's biggest risk. So,
Captain Obvious has spoken.
I guess that we should all head to the voting booth in November and vote to make geopolitics better. Maybe we'll write that in as like a request. Please improve the geopolitical situation.
Thanks.
His track record, he's one of the most impressive bank executives this country has seen almost in history, or he ranks up there really high. So I'm not...
Only big bank executive left who is gone through the great financial crisis and still managing a bank. Look, the guy's incredibly intelligent and runs, like you said, probably the most successful bank in today's numbers by really any way you look at it. Constantly avoids risks that other banks fall into. But I just find his guidance and commentary to be somewhat laughable in terms of usefulness.
Yeah, it's someone who, whenever he comes across the headlines, and the reason that we even would lead the show with it is because of his pedigree, that I'm often looking to see what he has to say. But I found myself over the course of the last year to year and a half sort of fading away from looking at this type of commentary just because this isn't instructive at all. I could have told you this. I'm not nearly as smart as Jamie Dimon, that there are geopolitical concerns out there. And the commentary that he's had regarding the U.S. about a recession, it seems like he's been saying that for 2 years now, since 22, that this is a potential concern. Not to say that he won't be right at some point. I mean, my dad was saying since 2012 that the market was going to go down, and eventually it did. But I would say
took a little while, didn't it?
I would say if you studied the 12-year return of the markets, that overall sentiment wouldn't be entirely right.
Sure.
And the same thing applies here when you're mentioning geopolitics. At some point, he's going to be right. There's likely going to be a concern that emerges from all of these issues percolating, but this idea of just saying that it's out there is really not something that is relatively astute at this point.
Yeah, and look, sometimes I think the way in which these commentaries get framed by the press, it might not be terribly helpful too. It's not like he just went.
We don't have the full context.
Yeah, he didn't go to a lectern and say geopolitics is getting worse and then walk away.
And I'm sure he's answering questions. He's not speaking.
It was part of a larger interview. Yeah. It was part of a larger discussion. And he was specifically asked, presumably, hey, what do you look at as the biggest risks facing the economy? He wasn't asked, just generally speaking, hey, tell us about the economy. And he replied, well, geopolitics is getting worse. And to some extent, as a CEO of a bank, you do constantly want them looking out, and rather than focusing solely on the potential upside, to looking for the biggest risks that are out there and trying to find them. The banks are by definition, kind of risk managers. And so the larger context of the quote, geopolitics is getting worse, they're not getting better. There's chance for accidents in energy supply. God knows if other countries get involved. You have a lot of war taking place right now, before referencing Yemen's Houthi rebel attacks that have taken place in the Red Sea recently. Here's where I have a tough time. I think that I would probably acknowledge that geopolitical tensions seem higher than many points over the last few decades. You have the war in Russia and Ukraine. You have the war in Israel that's floating over to new borders. You have all sorts of migrant and crises and wars in Africa that are by and large not being reported on because they never are. The tough time that I have is, does that represent a bigger risk than a few years ago when North Korea was doing much more constant nuclear testing? Or interballistic missile testing? Does it represent a higher or lower risk than a few years ago when we were considering sanctioning Iran but hadn't yet, and they were ramping up their nuclear capabilities there? Does this represent a big, worse or better geopolitical risk than Brexit or Greece going through a currency crisis or any number of things that we have lived through? Is it, more or less geopolitical tension than right after 9/11? A number of these different things have been out there historically, and some of them have floated over to markets, right? I think we can all point to food prices as a result of the Russian war in Ukraine. Mm-hmm. Certainly, they all have impacts, but simply stating that geopolitical tensions seem high right now, well, I mean, they seemed high several times over the last several decades, and we have, by and large, continued. I guess my point would be, companies specifically have, by and large, still found ways to make money over time, and that's kind of what the stock market is all about. So I guess that's where I don't find this stuff to be particularly useful, and I admittedly have a tough time determining right in the moment, because it's not my area of expertise and I don't think there's a good way of measuring it, whether today's geopolitical tensions represent a bigger or lesser risk than other points of high tension in the past.
Yeah, I'm in the same camp where on a daily basis, you and I focus largely on the economy and the markets, and assessing all the geopolitical conflicts out there would just make my head spin trying to keep up with all that.
Right? Do we feel more nervous about geopolitics today than we did in the 1970s when we were building nuclear bunkers in elementary schools? I don't know. Maybe we do. I'm genuinely unsure, but it's always a point in time when geopolitics seem like they are dominating. Every single year you have people telling you that the biggest risk to the stock market is geopolitics, and reliably it's almost never what the actual risk to markets are. So plenty of risks. I mean, if I'm looking at the immediate term, the biggest risk that I can think of right now for the U.S. economy happens to be employment and the consumer. If they lose their job, they're not going to spend as much money. If unemployment rates continue to tick up, we're in a recession. And so the immediate, that's what I'm focused on. I'm not really focused on all the geopolitical tensions because they've always existed in the background.
Yeah, it's interesting you point that out. Breaking news, we had the September confidence data come out on the U.S. where it tumbled to its lowest level in more than 3 years, according to the conference board here, sliding down to 98.7, down from 105.6 in August. It's the biggest one-month decline since August of 2021.
Let's go ahead and take a quick break here. When we come back, we'll revisit that consumer confidence reading because, like you pointed out, biggest miss in 3 years, a pretty significant hit at the same time that some other consumer signals seem to be flashing positive. What does it all mean? We'll cover that next on the Financial Exchange.
The latest news on inflation, the Fed, the economy, and how the markets are reacting every morning right here on the Financial Exchange Radio Network.
The IRS doesn't let you keep retirement funds indefinitely, so make sure you understand the rules related to required minimum distributions. Hi, this is Chuck Zada from the Armstrong Advisory Group. It's important for you to know that you must begin taking minimal annual withdrawals from your traditional IRA, simple IRA, 401k plan, or other retirement accounts once you reach a certain age. These annual withdrawals will be included in your taxable income, except for any part that was already taxed. When to take these withdrawals depends on your exact age, so as you build your retirement strategy, the rules regarding RMDs become even more important. Call us right now at 800-393-4001 and ask for your copy of the new free guide called Frequently Asked Questions About RMDs. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Last year, we introduced you to Mark Vaughter, CEO of Veterans Development Corporation. Mark is a career military man, and we're proud to have him back as the presenting sponsor of the 2024 DAV 5K Boston.
I'm a proud partner of the Disabled American Veterans, Department of Massachusetts. The DAV does incredible work, and it was one of the first organizations I became familiar with after my military service ended in 1984. As I built my company, Veterans Development Corporation, I did it knowing that I'd be giving back to fellow vets who need jobs, support services, medical supplies, and much more. I work with disabled veterans every day, and is one of the key reasons why I'm such a big supporter of Dan Stack and the Disabled American Veterans, Department of Massachusetts, in this year's DAV 5K Boston. Please join me in supporting this tremendous cause by taking part in this year's event or by making a donation to the DAV.
Veterans Development Corporation is proud to be the presenting sponsor of this year's DAV 5K, taking place on Saturday, November 9th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston.
A trust is an essential document that can help protect your assets from a nursing home and potentially eliminate your estate taxes. Cushing & Dolan are experts in elder law, estate planning, and asset protection. And this month, their new guide called Demystifying the Top 7 Estate Planning Trusts can help you learn about the various types of trusts that exist, the pros and cons of each, and ultimately, which one will be best for you and your family. Trusts are a critical element to any solid estate plan, but the process can be tricky, and that's why it's important to understand the differences between the types of trusts that are available. Planning for later life is a challenging process, so don't leave your assets to chance. Call Cushing & Dolan right now at 866-848-5699 and get your free guide today. That's 866-848-5699. You can also request the guide online by visiting their website at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have debt destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. This year's race is Saturday, November 9th at Fort Independence on Castle Island, and registration's now open. Help us support these great American heroes by visiting dav5k.boston and registering for this year's race. Your gifts will support a wide variety of initiatives like the DAV Transportation Program, which takes disabled vets to important medical appointments that supply both the physical and mental care they need. For more information information or to make a donation, visit DAV5K.Boston. The DAV 5K Boston is presented by Veterans Development Corporation.
As Paul was mentioning, at 10 a.m. this morning, the Conference Board released their monthly data on consumer confidence. This is one of several different surveys we get of the consumer. The University of Michigan does a separate consumer sentiment index that's been longer ongoing. I think that one started in the 60s. This one started in 1985. The Consumer Confidence Index fell in September to 98.7. That was from an upwardly revised 105.6. So again, the way they do this measure is kind of finicky, but they basically said, okay, consumer confidence was 100 in 1985, and so if you get readings above 100, it's generally considered historically fairly confident, and if you get them below 100, it's generally considered fairly negative. And for some context, for most of the late 2010s, really starting in mid-2017, right through the end of 2019 or beginning of 2020, you had consumer confidence bouncing around 120 to high 130s. Since COVID, you had a dip well into the low 80s and kind of bouncing around the 100 to 115 range, and slowly seeing some persistent declines recently. Further context, in the bottom of the stock market in 2009, you had this thing reading around 30. So you do get a lot worse than what we've seen over the last few years as well when sentiment really shifts. But a few things about this. One, it's a fairly volatile gauge. It is a survey piece of data, and so you see it bounce around quite a bit, as we're seeing. Like in August, is it August or July that this reading was as of? So when we were at 105.6, that was, 105.6 in August, whereas September fell to 98.7. Paul, is there anything you can point to specifically that would explain to me why confidence would fall by some 7-ish points August to September? Because I struggle to come up with anything specific.
It seems like gleaning through this report, and again, this is just kind of hot off the presses, so trying to digest this relatively quickly here, but it seems like labor market conditions are something that was at least mentioned by some of the survey participants. This comes off the heels of some relatively weak jobs reports that we've digested over the course of the last couple months. So to me, that would be the prevailing takeaway that labor market conditions are concerned. It's worth noting that this data was compiled prior to the 50 basis point cut that we saw from the Federal Reserve on the 18th here. So perhaps that change has people more optimistic when we see the next round of data coming through. But like you said, Mike, it's just a data point. It's worth just discussing, but not necessarily something that should be overly alarming.
Yeah. Other things here, like the assessment of the labor market. The big labor market miss that we had was actually recorded in very early August. So this first report back in August would have accounted for that, and sentiment was up in August, whereas now it's down. So I don't have a great means of figuring out what this might mean for the overall economy, other than better readings would seem to be better for the outlook. Consumers were less optimistic about the business conditions in September. 18.5% of consumers expected conditions to improve. That's down from 19% in August. 16.6% expected business conditions to worsen. That's up from 14.5%. The labor market, where I think this is particularly interesting, consumers were basically flat on their expectations for the labor market. So 16.4% of consumers expected more jobs to be available. It's actually up slightly from the reading in August, but 18.3% anticipated fewer jobs, which is higher reading on that. Finally, on income prospects, 18% of consumers expected their incomes to increase. That was down from 18.6% last month, and 13% expected their incomes to decrease, which is a more significant upward revision of 11.7% on the previous month. So again, what do you read of this? Well, directionally, consumers felt a little bit worse than they did in September than they did in August. I wouldn't go so far as to read this to say, and it means we're heading for a recession. There's almost no indicators that turn so dramatically quickly that you can say, oh yeah, that's clearly recession indicator. But you get a few of these that stack up, and it starts to make you scratch your head a little bit to say, what's going to be the thing that changes people's minds? piece in Bloomberg from Tyler Cowen that Buy American policies don't help Americans. So, I think I can think of a few ways in which they would be more costly for Americans, where they would add, perhaps the not best-in-class product to the American, the American market and get an unfair advantage here. What does Tyler lay out here in terms of his argument of why this doesn't work?
I thought this was a compelling piece. It's basically discussing this idea that the Buy American Act is an act that was around with Herbert Hoover in 1933, and our economy has shifted dramatically, as most developed countries do over the years, where if you look at the manufacturing sector, back in 1979, 22% of non-farm workers were working in the manufacturing space. That number sits at 8% today. There's not nearly as many manufacturing jobs. However, the point that he makes is that it's not as if the United States in general is lagging in terms of its manufacturing capabilities. There's messaging out there by politicians that the U.S. needs to bring back jobs domestically, that there needs to be more production here. However, if you read many different economic pieces, we are the fourth largest steel producer. We are the second largest automaker. 16% of global manufacturing output in 2021 was done by the U.S., only surpassed by China. So I think those things are important to keep in context, this idea that it's not always so black and white that, the U.S. is lagging from a manufacturing standpoint. The other point that he makes there is that when you manufacture in the U.S., it's more costly than doing it with foreign firms. And certainly a lot of us understand the national security concerns that come into place working with countries like China and Russia. I'm not encouraging that, but there are many allies of the U.S. that can manufacture things cheaply and more efficiently that could end up, being beneficial to the U.S. when it's doing these infrastructure products. That's really the point of this piece.
Yeah, and there's some compelling arguments there, and I can see how we might not have the best manufacturing skill set to manufacture bridges that need to be repaired throughout the United States, and that could probably get done a lot more cost effectively in South Korea, for example. I think this is quite nuanced, and obviously you have to draw a line somewhere in terms of what you're going to do. But, for example, should the United States be manufacturing its own subway cars? Do we really have the skill set to be doing that here? Is it really necessary that we do? Or could you use trade policy in a way that encourages our allies to do certain things, right? Like, hey, we're only going to accept bids from NATO member countries that, meet our goals in terms of defense spending. I'm kind of spitballing here, but there are other ways to do this that don't require everything to be manufactured here in the United States. And while I do attempt to buy things made in America on the consumer level, we know how difficult that is there. You extrapolate that out to massive government projects where billions in taxpayer money is going to, it becomes a little bit tougher to justify at the end of the day. Let's take a quick break. When we come back, full market recap with Wall Street Watch.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Discover the fish and farm market at the Boston Fish Pier. Open every Saturday from 11 a.m. to 3 p.m. in Boston Seaport. From fresh seafood to juicy tomatoes and sweet corn to grab-and-go options, indulge in the peak of summer's bounty. Support local farmers and enjoy the freshest ingredients all summer long. Sponsored by Mass Farmers Markets, a nonprofit dedicated to championing farmers markets across Massachusetts. Find a market near you at massfarmersmarkets.org.
This Veterans Day weekend, help honor all who have served this country. Join us on Saturday, November 9th for the 9th Annual Disabled American Veterans 5K Boston. It's a run and walk to support the DAV Department of Massachusetts. Saturday, November 9th at DCR's Castle Island in South Boston. Together, let's honor all who have sacrificed for our freedom. Register or donate now at dav5k.boston. That's dav5k.boston.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
Saving money in an IRA or a 401k can provide tax advantages and are excellent ways to help make sure you're financially prepared for retirement. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you're nearing retirement, you need to be aware of the federal regulations regarding required minimum distributions. Once you reach a certain age, you must begin withdrawing money from these accounts. RMDs can influence which accounts to withdraw from first and how much you'll owe in taxes during retirement. If you need information regarding the rules related to RMDs, call us at 800-393-4001 and ask for your copy of our new free guide called Frequently Asked Questions about Required Minimum Distributions. RMDs are a core element to your retirement strategy, and this guide can help educate you on the rules related to them. That number again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange Quick Tip of the Day. And today we're talking about your new guide, Todd, Demystifying the Top 7 Estate Planning Trusts. If there are younger families out there, should they consider having a trust in place, and what type?
Most people don't think about it when you're young, but if you're a young family, meaning you've got minor children, you might not have a ton of assets yet, but you want to make sure that what you do have is protected for your children. You could probably use a revocable trust. I don't think you need an irrevocable trust, but a revocable trust. You put your assets in. Again, they're going to avoid probate. Again, it may or may not be a big estate tax issue at the moment, but whatever you have, your children can't own, right? They are minors. So you don't necessarily want to leave your assets to a guardian and have the guardian deal with everything when you can design a trust to hold the assets and ensure how and when and where and why they get these assets. Just pick the right trustee, put the language you need in the trust to control it for those children, and the trust will accomplish that task. So just because you're young, folks, doesn't mean you shouldn't think about your estate planning. Sometimes it's not all about the money and the probate and the taxes, but more so about the family behind the estate plan.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they have written a brand new guide called Demystifying the Top 7 Estate Planning Trusts. Call right now for your free copy, 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
After yesterday resulted in yet another record high close for the Dow and S&P 500, markets today are relatively quiet and in mixed territory. The Dow is up by only 12 points, mostly flat. S&P 500 down about 0.25% or 13 points, and the NASDAQ is down by over 0.33%. Russell 2000 is edging 3 points higher. 10-year Treasury yield up by 3 basis points at 3.75%, and crude oil up nearly 2% higher, trading at $71.62 a barrel. Several Chinese stocks, including Alibaba, JD.com, Baidu, and others, are seeing gains this morning after China's central bank announced a new round of stimulus measures to help boost its struggling economy. Global mining stocks, including Freeport-McMoRan and Southern Copper, are also seeing gains in reaction to the stimulus announcement, seeing that China is one of the world's largest consumers of copper and other commodities. Meanwhile, Visa shares retreating by 4% after Bloomberg reported that the Justice Department is planning to file a monopoly lawsuit against the payment network firm over its debit card business. Elsewhere, Deere shares are flat after Donald Trump said at a presidential campaign event that if elected, he would slap 200% tariffs on the farm equipment maker if it sold products made in Mexico. Starbucks was downgraded by Jefferies to underperform from hold, citing low visibility in the U.S. and China in the near term. The firm also expects near and medium-term estimate reductions. Starbucks shares off by about 1/3%, and Lowe's was upgraded to outperform from perform by Oppenheimer, noting that demand should improve as the Fed cuts rates and sees compelling longer-term fundamentals. Lowe's up by 1%. I'm Tucker Silva, and that's Wall Street Watch.
Folks, I want to talk to you about the live broadcast of the Financial Exchange coming up. We're doing 2 of them. The first one's on October 8th out in Springfield. The second one, October 24th down in Hyannis. If you haven't been to one of these before, we're going to do a live 2-hour broadcast of the Financial Exchange. You can come watch that get done, and then you can also join us after the fact for a free educational lunch with the Armstrong Advisory Group. Chuck and I will be there talking about the upcoming presidential election, the potential policies that both candidates have proposed, what effects those policies could have on the current economic landscape, all sorts of different items that obviously impact you, the everyday investor. Again, it's 2 events. The first one, October 8th at the MGM in Springfield. The second one, October 24th at the Margaritaville Hotel and Resort on Hyannis. There's 2 ways to sign up for this, and you do need to sign up ahead of time. We will fill these events ahead of time, and we need to have signups in advance here. But 2 ways to sign up, like I mentioned, armstrongadvisory.com/events. You can get a whole bunch more information there. If you're having a tough time or just not comfortable signing up online, call us. The phone number is 800-393-4001. We can give you a whole bunch more information on the 2 events. But again, it's a live broadcast of the Financial Exchange, followed by a free educational lunch from the Armstrong Advisory Group. The first one's at the MGM Springfield, October 8th. Second, Margaritaville Hotel and Resort Hyannis, October 24th. You can call us at 800-393-4001 to reserve your spot, or check it out online at armstrongadvisory.com/events.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Tucker mentioned a choice by John Deere and then a mention by Donald Trump at a campaign rally recently. The Illinois-based company announced in June that they're going to be moving the production of some models of small and medium-sized construction loaders to their plants in Mexico from where they're currently made in Dubuque, Iowa. In 2022, they decided to move some cabs for large farm tractors to Mexico from Waterloo, Iowa, so definitely not the first time something like this has happened, and it's scheduled to be completed this year. When asked, Deere executives said the moves were intended to free up manufacturing space and employees at U.S. plants for other models. No way to really prove out whether or not that's true, but the company said it would start assembling its new 9RX tractor in that Waterloo space that was currently occupied or formerly occupied. But again, interesting timing here, saying that, yeah, we moved these jobs back in 2022 and just now we're going to start manufacturing this new tractor line there. Deere also pointed out, hey, we've invested over $2.5 billion in its U.S. factories over the past 4 years, and that, the United States is Deere's largest market. In response, candidate Donald Trump has said that he would levy 200% tariffs on any of those goods that moved manufacturing from the United States to Mexico. Whether or not that's realistic or can be done given the free trade agreements with the U.S., Mexico, and Canada, it's all interesting questions. But, obviously the White House has proven that they have pretty vast power when it comes to tariffs on different items. Paul, your initial thoughts?
It seems like from a political rhetoric standpoint that the idea of tariffs have really been central as Donald Trump has gone around the campaign trail, where he's discussed about the tariffs assessed to China. I believe a 60% one was mentioned there, as well as 10 to 20% to other countries in terms of imports. I've vocalized before that as much as I felt that the Tax and Jobs Cut Act was economically stimulative, these types of measures I don't feel as if would be to our country, that it's coming off the heels of inflation that we hadn't seen in 30, 40 years. So I wonder how much of this is posturing, going through the campaign trails. It's certainly, from a messaging standpoint, strong to go out there and say that you're going to bring a lot more manufacturing or jobs to the United States. But I don't know economically if necessarily that is the best course of action, particularly because you risk retaliatory efforts by a lot of these countries. And then specific to this one, there is a agreement in place that Trump actually put together during his first term with the U.S., Mexico, and Canada that you alluded to earlier, that allows for a tariff-free agreement amongst the three countries, which has certainly been beneficial to the United States with all the issues that's gone on in Russia and Ukraine and some of the issues in China as well, to be able to utilize Mexico and Canada as imports.
Yeah, I mean, look, you can make an argument that obviously the U.S. relationship with Mexico has deteriorated somewhat over the last few years with migration and things along those lines. But I really do struggle with policies that are intended to slap tariffs on arguably one of our top 5 closest allies in the world. Mm-hmm. Canada, Australia, United Kingdom, maybe France. Anybody else take the place of Mexico there? Not many that I can think of. And so I do struggle with that. I'm not saying that we should just ignore this fact. Like, I would want to know, hey, John Deere, why are you choosing to manufacture this stuff in Mexico instead of the United States? Is it purely just labor costs? Are there other things that the United States isn't doing that Mexico is doing? Is it taxes? Is it a number of other things? Because so far, a carrot plus stick approach has been far more successful than just the stick approach to trade policy and keeping jobs here. And again, where I worry is you just get to this tit-for-tat level of tariffs where we know that we don't really manufacture everything that we produce here in the United States. And while that might be the appropriate policy for a country like China that very clearly cheats on trade policy, I can't point to Mexico and say that the same thing is happening. I don't think that Mexico's government is offering massive subsidies for Deere to manufacture there instead. I don't think that they are artificially keeping labor costs down. I don't think that they're doing currency manipulation or trying to rip off the technology that John Deere creates. So all those same accusations that I think you can levy on China and create a successful argument for unfair trade practices, I just don't think it applies to Mexico. And so then my question is, okay, what's the response from the Mexican government if that happens? Because were I them, I would find a way to respond.
Sure.
Let's take a quick break. When we come back, time for a bit of China talk now that we've started to alluding to it. There's been some policy shifts from Chinese officials. What will they mean for those Chinese citizens? And then also, what might they mean for markets there and U.S. investors? We'll cover that next on the Financial Exchange.
Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play the Financial Exchange. This is the Financial Exchange Radio Network.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
Trusts are essential documents that can help protect your assets from the nursing home. Call Cushing & Dolan right now at 866-848-5699 and get their free guide called Demystifying the Top 7 Estate Planning Trusts. Let them help determine which is right for you. That's 866-848-5699 or request the guide online by visiting their website at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Summer is coming to an end, so it's time to take out your planner and book a spectacular vacation in the U.S. Virgin Islands, America's Caribbean paradise. St. Croix, St. Thomas, and St. John are three of the most incredible islands anywhere in the Caribbean, and their popularity is at an all-time high. Go to visitusvi.com and check out the American Caribbean, where you'll find all the information you need to book a trip that you'll never forget. If you act fast, you can still celebrate New Year's on St. Croix and enjoy the St. Croix Crucian Festival from December 26th through January 4th. Enjoy world-class cuisine, pristine beaches, a wide variety of water sports, and some of the greatest musical acts the islands have to offer. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. Fall naturally in rhythm with the heartbeat of the islands on your trip to America's Caribbean paradise. Go to visitusvi.com and make your plans today. That's visitusvi.com.
If you're approaching or have recently reached the age of 73, required minimum distributions should be a key consideration as you evaluate your retirement strategy. Hi, this is Mike Armstrong from the Armstrong Advisory Group. There are several factors to think about when it comes to RMDs, including the types of accounts that require RMDs, when to take your withdrawals, how your RMD is calculated, and the penalty for missing all or part of an RMD. That's what our new guide this month is all about. It's called Frequently Asked Questions About Required Minimum Distributions, and you can get your copy today by calling 800-393-4001. RMDs are a key part of your retirement strategy, so don't delay. Get your guide today by calling 800-393-4001. That number one more time, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Taking a look around here at markets, we have the Shanghai Stock Exchange in particular up over 4%. They're notching their best day in 4 years on easing policy coming out of China to, try and shake things up in a way that their industrial policy hasn't been able to so far this year. What are we seeing, and I guess as importantly, what are we not seeing in terms of policy shifts from the Chinese government with these updates and changes here, Paul?
So, Mike, a couple of these stimulative measures that the Chinese government took included lowering their 7-day interest rate, benchmark interest rate, from 1.7% to 1.5%. So lowering interest rates, also trying to make it a little bit more incentive for people to purchase homes by lowering the down payment requirement for second homes from 25% down to 15% down. And then you also had a cut of rates on existing mortgages. So unlike the U.S. market, for listeners out there, where we can refinance our mortgages, that is not applicable in China, but they are applying this rate cut to trickle out across all existing mortgages out there. And then lastly, the initiative that they took with their local governments is a little bit more easing on the bank requirements in terms of what needs to be held for cash reserves. all of these measures that I just mentioned, while stimulative in nature in terms of how they're defined, I don't necessarily, and the skepticism is shared in the Wall Street Journal, think that this is enough, and many don't think that this is enough to stimulate the Chinese economy, where really the stimulation needs to be focused on trying to bolster and boost Chinese consumption, which has just been a really difficult thing to try and do post-pandemic. There is a lot of, we talked about consumer confidence earlier in the show. There is extremely record low levels of consumer confidence in China at the moment.
Yeah, and I think there would be really two ways of addressing that, neither of which the Chinese government seems to have any interest in. One would be addressing some of the concerns consumers seem to have there about financial stability and safety nets. There aren't many. There's not a strong Social Security program, pension program. There's not a strong, Medicaid government insurance equivalent type program. There's no real assurances that, hey, if I become injured on the job, I'm going to be able to support my family or feed myself there. I mean, perhaps some of the worries about starving to death are no longer the case like they were in China in the 1960s, but it is not the type of social net that you have here in the United States. Now, I think there could be plenty of criticism that we've gone exorbitantly too far in some of the safety nets here in the United States, and those costs need to be pared back in some ways, although we're not talking about that in this presidential election. But in China, that doesn't exist, and I think when you combine that with it's tough to see how much of this exists, but like a genuine maybe distrust of information coming out of your government. I think that would be, a general conclusion that a lot of Chinese citizens have is, I'm not sure that I can trust that the policy that exists today will exist tomorrow, or that I have any real due process if I need to sue my employer or something along those lines. With the absence of, that combination of mistrust as well as lack of a safety net, you can see why it's pretty difficult to stimulate demand here. Really, the only cause for stimulating demand is if you convince the public that, hey, the assets that you can invest in today or the stuff that you buy today might be worth more in the future. And you have a really tough time doing that given what has happened to the real estate sector over there over the last few years.
The real estate market is the crux of the issues that they're dealing with there. It accounted for 25% of their economic activity, and it's been an area that just has been so beleaguered over the last 3 or 4 years. Barclays has estimated that since 2021, $18 trillion of household net worth has been wiped out. That's approximately $60,000 per family over that period of time that has been wiped out. If you look at the way the Chinese economic structure was based on pre-pandemic, a lot of middle-class families would utilize their savings to purchase real estate or purchase investment properties, and the backlog of unfinished homes that they have now has been a drag on the economy and the Chinese government for the last several years. So it's mentioned here that perhaps if they're able to clear out some of those backlog of unfinished homes, and we talked about all the property developers that went under there too, maybe that would restore some confidence. Otherwise, you're talking about stimulative measures of influencing or unleashing a lot of cash reserves and borrowing, and that's not something that the Chinese government is necessarily going to do, just stoke in tons of cash into the system to try and increase consumption.
Yeah.
I don't think.
Yeah, I mean, and we've talked at length about similar types of policies that are being talked about, like, the type of stuff on real estate that's being discussed here shouldn't sound like a foreign concept. Like, it kind of mirrors policies that we're talking about here domestically. Hey, should we give $25,000 to first-time home buyers as a credit? It may drive up housing prices in China, but it doesn't actually do anything to get at the value of homes. It just makes it easier and cheaper to buy them in China if you're lowering the down payment requirement.
And they have the reverse supply problem where we are undersupplied and underdeveloped over the last 15 years. They're in the opposite situation where they've overdeveloped, and so much to the point that they can't even finish the homes that they've set out to build in the first place. So that it just leaves them in a really difficult spot from an economic standpoint. I'm sure they'll try and hit their 5% economic growth figure that they have projected.
Well, they still will. Don't worry.
They always do.
In somewhat related news and definitively related to the point that I made to my wife, which is we are definitely not going on a family vacation to China anytime in our future. A prominent economist at one of China's top think tanks, and I believe a member of the Communist Party, his name is Zhu Hengpeng, has been disappeared, I think is the best way to describe it. So as I think most know, under Xi, the party has directed a far-reaching clampdown on any forms of dissent. And Zhu, who turns 55 this month, was detained in the spring after he allegedly made some impolitic remarks. This is a quote from the Wall Street Journal in a private group chat on WeChat, which is a mobile messaging platform. It was not These were not comments that he made on like the equivalent of Twitter or Facebook or anything like this. This was a private group chat that, I'm sure is supposed to be allegedly encrypted and not monitored by your government. His remarks included comments about China's flagging economy and veiled criticism of Xi that referred to his mortality, one of the people said. I doubt that was a statement like, we should take out Xi. I would just imagine it was a statement of like, he can't live forever, can he? Nonetheless, it couldn't really be determined which offenses Zhu was guilty of, but he was removed from all of his positions at the Cass Institute of Economics. His name disappeared from the online list of personnel at a think tank affiliated with them, and hasn't really been heard from since. So that's what happens in China when you open your mouth about the errors of Xi Jinping.
Yikes.
I bring this stuff up when we can because it's just such a foreign concept to us these days in the United States that it bears reminding. Quick break. A lot more to cover in the second hour of the Financial Exchange. Stay tuned, folks.
Despite overwhelming support from Democrats and Republicans, time is running out for Congress to pass the AM Radio for Every Vehicle Act, which will keep AM radio in cars. Text AM to 52886 and ask Congress to bring this bill to a vote now. AM radio is too important to let this moment pass us by.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
Summer is coming to an end, so it's time to take out your planner and book a spectacular vacation in the U.S. Virgin Islands, America's Caribbean paradise. St. Croix, St. Thomas, and St. John are 3 of the most incredible islands anywhere in the Caribbean, and their popularity is at an all-time high. Go to visitusvi.com and check out the American Caribbean, where you'll find all the information you need to book a trip that you'll never forget. If you act fast, you can still celebrate New Year's on St. Croix and enjoy the St. Croix Crucian Festival from December 26th through January 4th. Enjoy world-class cuisine, pristine beaches, a wide variety of water sports, and some of the greatest musical acts the islands have to offer. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. Fall naturally in rhythm with the heartbeat of the islands on your trip to America's Caribbean paradise. Go to visitusvi.com and make your plans today. That's visitusvi.com.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Every single day, more than 2,000 U.S. companies face a cyber threat or attack. The Boston Red Sox and Fenway Park chose Centripetal as their official cyber network security partner to ensure the protection of their network and ballpark. Intelligence is the answer to protecting your network, and Centripetal is the global leader of intelligence-powered cybersecurity. The choice is yours. Are you going to be another one of those attacked companies? Or are you ready to experience a radical new cybersecurity solution? Find out why the Red Sox chose Centripetal at www.centripetal.ai. Trusts are essential documents that can help protect your assets from the nursing home. Call Cushing & Dolan right now at 866-848-5699 and get their free guide called Demystifying the Top 7 Estate Planning Trusts. Let them help determine which is right for you. That's 866-848-5699. Or request the guide online by visiting their website at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is the Money Matters Radio Network. WBNW 1120 AM and W275 CM FM. Concord, Boston. The Money Matters Radio Network.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Frequently Asked Questions About RMDs. Mike, one of the places where there's been a huge change in the last few years is with regards to inherited IRAs and whether individuals are required to take money out of them on an annual basis. What is the latest guidance from the IRS?
Well, the latest guidance is that it still depends. It depends on so much and so many complicating factors. Were you married at the time that you passed away? What's the age difference between you and the person who passed away? Are you older or younger? When did the person pass away? I could go on at length here, Chuck, but there are a lot of complicating factors. But generally speaking, yes, you are going to be subject to a required minimum distribution in most cases when you inherit a retirement.
And for someone who is inheriting a retirement account from someone other than a spouse, there also is this 10-year period with which you must exhaust the account completely. So you're going to have to end up having all of that come out as taxable income, even if your RMDs don't satisfy that 10-year requirement.
Yeah, they really like to complicate this, and so you've got two competing formulas in there at all times about what you have to do with a retirement account that's inherited. Really, really complicated stuff, Joe.
It's a really complex issue. If you like to learn more about this topic, the guide again is titled Frequently Asked Questions About RMDs, and the way to request it is by calling 800-393-4001. That guide again is titled Frequently Asked Questions About RMDs, and the phone number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you retired like me, and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it, and your property. If you owe the IRS back taxes or you haven't filed in a while, the tax relief line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
Discover the fish and farm markets at the Boston Fish Pier. Open every Saturday from 11 a.m. to 3 p.m. in Boston Seaport. From fresh seafood to juicy tomatoes and sweet corn to grab-and-go options, indulge in the peak of summer's bounty. Support local farmers and enjoy the freshest ingredients all summer long. Sponsored by Mass Farmers Markets, a nonprofit dedicated to championing farmers markets across Massachusetts. Find a market near you at massfarmersmarkets.org.
Hi, I'm Lisa Hughes. This Veterans Day weekend, help honor all who've served our country and join WBZ for the annual DAV 5K.
5K, a run or walk to support disabled vets here in Massachusetts with housing, transportation, and other critical support. Saturday, November 9th at DCR's Castle Island in South Boston. Let's thank all who have sacrificed for our freedom and help our heroes on their road to recovery. Visit DAV5K.Boston to register or donate today.
The DAV 5K Boston is presented by Veterans Development Corporation.
Protecting your assets is your most important financial responsibility, and irrevocable trusts can help you. Keep your assets safe from probate and the nursing home by calling Cushing & Dolan right now at 866-848-5699. Get their new guide called Unlocking the Power of Irrevocable Medicaid Trusts. That's 866-848-5699, or request it online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org, CancerSupportMass.org.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Good morning. Welcome back to the Financial Exchange. It's Mike Armstrong, Paul Lane, and Tucker Silva with you this Tuesday as markets trying to stage a bit of a comeback here. We've got the Dow now up 0.25%. The S&P flat for the day, down 1 point. The NASDAQ pretty close to flat, down 8 points in early trading. The big market news of the day was that Asian markets, specifically the Shanghai index, up over 4% as they close out the trading day there on Chinese stimulative measures. And then finally, the yield on the 10-year Treasury continuing to creep back up in a positive direction after the Fed cut interest rates last week, now sitting around 3.75% on that 10-year Treasury yield, which is the key yield that gets used to determine things like mortgage rates, so we keep an eye on that one as well. Anything else catching your eye in markets in early trading so far, Paul?
We talked about that consumer confidence data that came through a little weaker than anticipated, but again, just one data point there. That was the lowest confidence reading that we've seen in 3 years from the conference board. That came out at 10 a.m. this morning.
Early in trading so far today, speaking of Dow components, you've got Boeing off about 1%. Boeing also happens to be the second worst performing company in the Dow Jones Industrial Average. Do you know the worst performing company in the Dow Jones Industrial Average, Paul?
Jeez, Intel.
Intel is it. Bing, 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 bing. Good job. Yeah, it's no wonder that index has a tough time keeping up with other broad measures of the overall U.S. stock market when you've got real great companies like Boeing and Intel leading the way in there. But nonetheless, Boeing stock, by the way, this year off 1% today, but off about 38% so far for the year. Intel's actually up 1.5% today, but down 52% for the year. But back to the issue with Boeing. If you missed it, it was 2 Fridays ago, I believe, that Boeing's union voted pretty close to unanimously to reject the offer from Boeing management for wage increases and additional contributions to the 401k and other commitments that the company made. They've now come back to the table with what they're calling their final proposal, which good luck with that. I mean, maybe that's a good negotiating tactic, but unless you plan on never making airplanes again, it's probably not going to be your final offer. The proposal calls for a 30% raise over a 4-year time period that was previously sitting at 25%. They also gave the union 3 days to ratify it, which just takes a while to vote on things like this, but nonetheless, that is what has come to the table at this point. A 30% pay raise over a 4-year time period. Again, not up significantly, but up from that 25% increase previously. Your thoughts, Paul?
The leverage is really all in the union's court at this point. Boeing, as you mentioned, has struggled tremendously as a company year to date with their stock price getting completely obliterated. They've burned about $1 billion a month in terms of cash flow, and a prolonged strike would hit their credit ratings on the debt that they have out there, leading some ratings agencies out there to perhaps downgrade their debt to junk status, and you've got them burning hundreds of millions of dollars the longer that these 33,000 machinists continue to strike. So they really have a lot of leverage on their side if they want to put the screws down to Boeing that really needs to get this resolved and try and enact this turnaround that they are attempting to undergo here. So initially, the union had been looking for a 40% pay increase over this 4-year period. As Mike mentioned, they've now come back, Boeing this is, with a 30% pay increase over 4 years. That was up from 25%. So interesting to see where it will settle. It's in Boeing's best interest to try and get this wrapped up really quickly.
Yeah, I've been trying to come up with reasons why it might be somewhat in Boeing's favor here, and I've largely struggled to come up with them. But yeah, a few points here that Boeing may have some argument to make here. One, they genuinely can't afford a lot more. Like that isn't, sometimes you have companies coming out and asking the unions to take a hit, and it's like, well, okay, take a look at your C-suite and take a look at your stock price, like you can afford it. Boeing's at risk of a credit downgrade here, and so it's not as though Boeing's going to ever go out of business per se, but they are strapped for cash here and do need to try and make a good deal with the unions. The unemployment rate has ticked up a little bit, and so had you gone on strike, say in 2021, I would agree wholeheartedly with you, Paul, that like Boeing has no upper hand here. You've got more people not working today. You've got a slightly looser labor market. And so were I the striking union worker, I'd be a little bit nervous about, what am I going to do if this thing rattles on for 3 months? Will I be able to find a job in the Seattle area that compares in terms of wages, or will I struggle? The counterpoint to that would be the unemployment rate for manufacturing sector right now is pretty remarkably lower than the overall unemployment rate. The overall unemployment rate is sitting at 4.2% as of August, according to the Bureau of Labor Statistics. The manufacturing unemployment rate only sitting at 3.5%. So, that's about as low as the overall unemployment rate has gotten to in this business cycle. So that's a pretty low rate of unemployment, and I tend to agree that the union sort of has Boeing over the barrel on this one, but we will see, right? I mean, you are still going without work. It's been a few weeks now. It's been a few weeks of no paycheck. In addition to the 30% pay increase over those 4 years, it doubles the ratification bonus to $6,000. It restores annual bonuses that the company had proposed to eliminate, increases company contributions to employee 401k plans, committing to continuing to build new airplanes in the unionized Pac Northwest, although I consider that one to be largely irrelevant since this contract won't cover any of the periods of time that new Boeing planes are created. So we will see where this one goes. And the first thing the union said was there's no way we can vote on this in 3 days, so back off on that front. We'll see.
That new Boeing CEO has a lot of work on his plate, that's for sure.
Poor Kelly. Kelly, yeah. I would imagine that the piles and piles and wheelbarrows full of cash that they put on his doorstep are helping to, cover and mask the sting a little bit, but yeah.
That's what the money's for, as Don Draper says in Mad Men.
Right. Speaking of strikes, there's a looming East Coast port strike that could shake up things quite considerably here. Businesses are preparing for a strike by dock workers on the Eastern Gulf Coast, which would begin on October 1st if negotiations don't yield a new contract. And companies have been preparing for this. They've been well aware of it. You've seen big businesses trying to stockpile their Christmas holiday stuff and get those orders in early because, a strike on the part of the East Coast dock workers in October, that is prime time for goods coming into the United States for the holiday shopping season.
Yeah, if this was to actually go to a strike, it's about 6% of GDP on a daily basis that could be impacted by this type of shutdown. If these ports on the East Coast or the Gulf were to shut down for one day, it would take about 6 days to clear any backlog. So it certainly is an important issue. It's something that we experienced firsthand in 21 and 22 with all the issues in the ports of LA. This time around, as Mike mentioned, the West Coast ports are not impacted. They have a separate union agreement that have already settled on a deal. But if this were to strike, then it would be a concerning measure here. We have until October 1st for them to sort this out.
I hate to keep making these, previous time inflation was a real issue comparisons, but the last time there was a strike across all East and Gulf Coast ports was 1977. And that did snarl up retailers ahead of the holidays pretty considerably. And I again, bring it up because there's been a ton of comparisons to today and the 1970s. Now, we've seemingly largely put the inflation concerns behind us, but these are the types of things that, should they happen,
stokes it back up.
Yeah, could create those problems again should we not head into a recession. Let's take a quick break. When we come back, a little bit of trivia here next on the Financial Exchange.
Tune in for Trivia, brought to you by Applebee's. Every day at 11:20 for your chance to win cool prizes. Text us at 617-362-1385 and use keyword Applebee's. Complete rules are available at financialexchangeshow.com. This is the Financial Exchange Radio Network. Summer is coming to an end, so it's time to take out your planner and book a spectacular vacation in the U.S. Virgin Islands, America's Caribbean paradise. St. Croix, St. Thomas, and St. John are three of the most incredible islands anywhere in the Caribbean, and their popularity is at an all-time high. Go to visitusvi.com and check out the American Caribbean, where you'll find all the information you need to book a trip that you'll never forget. If you act fast, you can still celebrate New Year's on St. Croix and enjoy the St. Croix Crucian Festival from December 26th through January 4th. Enjoy world-class cuisine, pristine beaches, a wide variety of water sports, and some of the greatest musical acts the islands have to offer. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. Fall naturally in rhythm with the heartbeat of the islands on your trip to America's Caribbean paradise. Go to visitusvi.com and make your plans today. That's visitusvi.com.
The IRS doesn't let you keep retirement funds indefinitely, so make sure you understand the rules related to required minimum distributions. Hi, this is Chuck Zada from the Armstrong Advisory Group. It's important for you to know that you must begin taking minimal annual withdrawals from your traditional IRA, simple IRA, 401k plan, or other retirement accounts once you reach a certain age. These annual withdrawals will be included in your taxable income, except for any part that was already taxed. When to take these withdrawals depends on your exact age, so as you build your retirement strategy, the rules regarding RMDs become even more important. Call us right now at 800-393-4001 and ask for your copy of the new free guide called Frequently Asked Questions About RMDs. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Congress is poised to pass a bill to keep AM radio in cars, but time is running out. 82 million Americans risk losing the news, sports, talk, traffic, and vital emergency information they rely on. Text AM to 52886 and tell Congress to pass this bill now.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Last year, we introduced you to Mark Vaughter, CEO of Veterans Development Corporation. Mark is a career military man, and we're proud to have him back as the presenting sponsor of the 2024 DAV 5K Boston.
I'm a proud partner of the Disabled American Veterans Department of Massachusetts. The DAV does incredible work, and it was one of the first organizations I became familiar with after my military service ended in 1984. As I built my company, Veterans Development Corporation, I did it knowing that I'd be giving back to fellow vets who need jobs, support services, medical supplies, and much more. I work with disabled veterans every day, and is one of the key reasons why I'm such a big supporter of Dan Stack and the Disabled American Veterans Department of Massachusetts in this year's DAV 5K Boston. Please join me in supporting this tremendous cause by taking part in this year's event or by making a donation to the DAV.
Veterans Development Corporation is proud to be the presenting sponsor of this year's DAV 5K, taking place on Saturday, November 9th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network.
Trivia is brought to you by Applebee's. Take your friends or family to any area Applebee's and enjoy half-price late-night appetizers after 9 p.m., including boneless wings, spinach and artichoke dip, and warm pretzels dipped in beer cheese. Don't forget to join Club Applebee's to enjoy exclusive deals and specials. You'll get a free appetizer just for signing up. Now that's eating good in the neighborhood. Void where prohibited. Dine in only. Well, on this day back in 1992... Pedro Martinez made his MLB debut pitching for the LA Dodgers. Pedro would go on to have a legendary career, as we all know, most notably as a member of the Boston Red Sox. Trivia question today: how many Cy Young awards did Pedro Martinez win? Once again, how many Cy Young awards did Pedro Martinez win? Be the 9th person today to text us at 617-362-1385 with the correct answer. And you win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text, and we'll give away that Applebee's gift card on Friday's show. 617-362-1385. And the 9th correct response will be our winner. See complete contest rules at financialexchangeshow.com.
Well, the Federal Reserve announcement on interest rates last week has come and gone, and therefore every Fed official out there is hitting the stomping ground to tell everybody about their viewpoints on things. So yesterday, Neil Kashkari published an essay. Atlanta Fed President Raphael Bostic, who a few weeks ago announced that he violated all sorts of Federal Reserve trading policies, spoke. Chicago Fed President Austin Goolsbee spoke yesterday. Minneapolis Fed President Neil Kashkari spoke at 1 p.m. yesterday. Today, Federal Reserve Governor Michelle Bowman spoke about why she dissented on the 50 basis point interest rate cut. You've got Adrian Kugler, another Fed governor, speaking tomorrow at 4 p.m. Thursday, 1, 2, 3, 4, 5, 6 different Fed officials speaking. And then Friday, just to top things off, Michelle Bowman's going to go again at 1:15. General tone that you seem to be getting from Fed officials on where they go next, justification for the 50 basis point cut, anything that you would take away from these speeches that you've seen. I know that neither of us watched them live because there's no possible way you can catch all of them live.
Every Fed member, Chuck had sort of laid this out before, plays a different role within its cast of characters. Sure. And it seems like these sentiments from different Fed members kind of go in line with some people who vehemently disagree in Michelle Bowman's case, or those who do agree with the actions that the Fed has taken, or those in between. Ultimately, everyone's entitled to their opinion. No one is right at this point. Mike and I can have our opinions too, and really it's a continuous situation where we're trying to digest data as it comes through, so it's unclear as to whether or not Michelle Bowman is right, that they should not have cut that significantly, or that others are accurate in saying that they should have cut quicker. Really what it will come down to is where the labor market lands. None of us know where that's going to be over the course of the next 6 to 12 months. But ultimately, that's all I take from it, is that each person has their own posturing and positioning, and ultimately it will be seen in the future as to who is correct in their sentiments here.
So I'm going to start with Michelle Bowman, as she did make headlines here. She was the first voting committee member to dissent on a decision since 2005. That's a long time between dissents from voting members. So Michelle Bowman's point was not that she thought rates should be higher or that they shouldn't move at all. She merely thought that 50 basis points might have been too extreme of a decision. Quote, "The jumbo cut could be interpreted as a premature declaration of victory on our price stability mandate. Accomplishing our mission of returning to low and stable inflation at our 2% goal is necessary to foster a strong labor market and an economy that works for everyone in the longer term." I find that comment to be interesting because, in fact, by making the jumbo cut, my interpretation was that, in fact, they're not declaring victory and that they're quite worried about that dual mandate, and so they had to move rates down in order to protect the labor market from further deterioration. So I thought it was an interesting what she took away from the 50 basis point cut and the signals that it could send to markets being, oh, we've already declared victory on the dual mandate here, to my interpretation, which I suppose I could see the argument that you're declaring victory on inflation, and maybe she thinks that's too soon. But by doing 50, the risk that I thought of was, are you going to freak people out by telling people that, hey, the labor market's weak?
Yeah, her viewpoint was two things: the victory on inflation, the victory lap there, but she also seems to be saying in her sentiments that she is of the opinion that the labor market is still in a really strong place, which, to be clear, it is historically. She's not ascribing to the theory that typically when the labor market starts to weaken, it is not something that weakens and plateaus. Oftentimes it can become a very slippery slope where that decline ends up being something that runs away from the economy really quickly. And so that's really what is the biggest piece to debate, whether she's going to be correct if the labor market does plateau at the levels it's at today, which we would agree are still quite strong. But if the decline worsens, then she's inaccurate saying that they really have taken this victory lap, or she's inaccurate in saying that they shouldn't have really, gone this quickly on the cut side.
We will see. On the other end of that curve, you have Chicago Fed President Austin Goolsbee, who, to my knowledge, has traditionally been pretty dovish during this cycle at least. And I always find him interesting because he's pretty outspoken and just has a more, casual and outlandish way of describing Fed policy than your more measured Jerome Powell or other Federal Reserve members. Quote, "Over the next 12 months, we have a long way to come down to get the interest rate to something like neutral to try to hold the conditions where they are." So Goolsbee really making the argument that, hey, not only did we do the 50 basis points here, but that might not be enough, and that, hey, the neutral interest rate, if we're trying to find that, is probably substantially lower than where we are right now. So don't be surprised if we continue to cut rates further. He has sounded quite a bit more strident than other officials in calling for lower borrowing costs, and that's been pretty persistent. So I don't think Goolsbee really speaks for the majority opinion on the Federal Reserve, but clearly at least one Fed member there saying that, hey, he wants to see substantially lower rates and relatively quickly.
Yeah, the important to note on that neutral rate concept out there to listeners, basically it's an abstract concept. There's not exactly a neutral rate that you can pinpoint, but it's really what economists say. It's the rate where monetary policy is neither stimulating or restricting economic growth. It's kind of that stasis there. Goolsbee estimates that that's around, or rather the Fed did their recent projections and estimated that it was around 2.9%. It's come down significantly from where it was previously, but still much higher than it was pre-pandemic. So that is really the area of focus as to where policy goes in the future here in terms of whether more cuts are needed, which Goolsbee points out that it is the case, but then of course you've got others who don't feel the same way.
The taking a look at other interest rates that we frequently monitor here, the yield on the interest rate on the average 30-year fixed rate mortgage, this is according to Mortgage News Daily, as we anticipated, bumped up a little bit over the last week or so, last 5 days or so since the interest rate cut. That primarily has nothing to do with what the Fed did, but rather the reaction of longer-term treasuries here bumped bumping up a little bit. And so that 30-year mortgage rate on average a few weeks ago was sitting at 6.15. We're now up to 6.2%. The big question that I have just about mortgages and the housing market generally is how many people out there either just became aware of how much mortgage rates have come down, nearly 2%, or still aren't aware of it yet, and what does that do to stoke demand in the real estate sector? Big open question in my view. Quick break. We'll have the trivia winner next, and then tax breaks that are being dangled out there for a presidential election. We'll cover that next on the Financial Exchange.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have debt destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
Discover the fish and farm market at the Boston Fish Pier. Open every Saturday from 11 a.m. to 3 p.m. in Boston Seaport. From fresh seafood to juicy tomatoes and sweet corn to grab-and-go options, indulge in the peak of summer's bounty. Support local farmers and enjoy the freshest ingredients all summer long. Sponsored by Mass Farmers Markets, a nonprofit dedicated to championing farmers markets across Massachusetts. Find a market near you at massfarmersmarkets.org.
Last year, we introduced you to Mark Vaughter, CEO of Veterans Development Corporation. Mark is a career military man, and we're proud to have him back as the presenting sponsor of the 2024 DAV 5K Boston.
I joined the Marine Corps when I was 18 and served proudly from 1981 to 1984. As CEO of Veterans Development Corporation, my goal is to give back to the veteran community, many of whom are employees of this company. This is one of the reasons I am so excited to be partnering with the Disabled American Veterans Department of Massachusetts on this year's DAV 5K Boston. The DAV works tirelessly to support many of our disabled veterans and provide them access to critical services that help them live comfortably every day. I hope to be part of many more success stories of our vets being able to achieve their goals and dreams when their service ends.
Veterans Development Corporation is proud to be the presenting sponsor of this year's DAV 5K, taking place on Saturday, November 9th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about your new guide, Todd, Demystifying the Top 7 Estate Planning Trusts. Now, do you lose control if you transfer your assets to an irrevocable trust in order to protect them from long-term care expenses?
Well, that's great when you mention that irrevocable trust, but limit it to the kind of trust where you're protecting it from the cost of long-term care. Because as the guide says, there's 7 different kinds of trusts that we're trying to demystify. And there's also many kinds of irrevocable trusts out there, not just one type. So many people think there's just one type. But this particular type, where you're trying to protect it from the cost of long-term care expenses, the answer is no. You do not lose control over your assets. There's a whole spectrum of control with irrevocable trusts. And this one, you keep about 95% control. Like You can live in your house. You can sell your house. You can buy another house. You can invest your money. You can manage your money. You can collect the income. Even the tax liability of these trusts are designed to be at your own rate. In other words, they are grantor trusts. You don't even pay any higher income taxes when you have this irrevocable trust. So this kind of trust, folks, you keep control and you protect your assets from the cost of long-term care.
Call right now for your free copy of Cushing & Dolan's comprehensive guide titled Demystifying the Top 7 Estate Planning Trusts. It will help you determine what type of trust is right for you and your family. Call 866-848-5699. That's 866-848-5699. Or you can request it from LegalExchangeShow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
Trivia question today was, how many Cy Young Awards did Pedro Martinez win? That would be 3. His first Cy Young was with the Expos back in 97, and then he would go on to win 2 more with the Red Sox in consecutive years, 99 and again in 2000. Winner today of the Financial Exchange Show t-shirt was Michael from Portland, Maine, and Michael's also registered to win a $100 gift card to Applebee's, which we'll give away on Friday's show. And trivia is brought to you by Applebee's. Enjoy half-price late-night appetizers after 9 p.m. and join Club Applebee's to enjoy exclusive deals and specials. You'll get a free appetizer just for signing up. Now that's eating good in the neighborhood void where prohibited, dine in only.
The number of tax proposals that Donald Trump, actually, I'm going to expand this beyond tax proposals to include tariffs as well as just other consumer-related policies that he's mentioned. It's becoming a pretty long list, and the tax wish list has now ballooned to over $11 trillion. I'm unsure if they also measure the offset impact from things like tariffs, but nonetheless, that's the number that's been come up with. So running through them here would include relief on taxes for tipped workers, relief on overtime for hourly employees, relief on taxes for senior citizens collecting Social Security, relief on taxes for higher income residents of primarily Democrat-led states who have high taxes through the SALT deductions. We have now seen a proposed cap on credit card interest rates in the 10% range. And apparently at a speech today in Georgia, he's expected to outline his vision to use tax breaks and other incentives to bolster U.S. manufacturing. So I don't know what that one specifically looks like, but that's apparently also on the table. Just practically speaking, I think even his policy advisors are having a tough time keeping track of all of these things. And you know, I've expressed my general conclusion is that I think a lot of this stuff is pure politics. They seem to come up in certain states, such as when campaigning in Long Island. He brought up the SALT deduction piece. And so I don't know how many of these are genuine promises versus, vote grabbers. But one thing that I find interesting is that, initially Kamala Harris's campaign campaign itself was responding to some of these and saying, you know what, we support a waiver on taxes on tipped wages too. They've stopped. Mm-hmm. And so I wonder if they're getting polling that these are just not hitting the way that they did previously, or if it's merely been more successful for Kamala Harris to just not discuss the economy and focus on things like abortion. I genuinely am unsure, but clearly they've backed away from some of this stuff. And there's some of these that I just find so interesting. Like, it puts Trump in the same camp as some very far left politicians when it comes to some of these proposals, right? Like, you look at, for instance, the cap on credit card interest rates. You are talking about a proposal there that literally Elizabeth Warren has been proposing for like 6 years. She's been bringing legislation to the Senate to try and get caps on credit card rates for a number of years. And I can get into all the reasons that would be a stupid policy. Credit card companies aren't just going to say, yeah, sure, let's lower our profit margins for the next couple of years here. No, they're going to make the money elsewhere. But, between the SALT cap going away, right, this is something that, many, many Democrats have harped on and have been pushing to get rid of. And now you have the main candidate running on the Republican side seemingly agreeing there and saying, yeah, we should get rid of the cap on SALT deductions, which, by the way,
that he instituted,
was a feature that he instituted to try and get states to, kind of come in line and reduce taxes and incentivize growth. And it's getting to the point where it's very difficult to predict and understand what, A, which ones are actually serious, and B, what the actual results would be. I've talked about this at length. Like, you think about the impact of waiving taxes on overtime pay. In one regard, you say, okay, I could see how that would impact the supply side of the labor market. You might have people saying, oh, yeah, I got to work those overtime hours because I'm going to reduce, I'm going to get a whole bunch of money and reduce my overall tax liability. On the other hand, if you have, say, a cop in Boston, like let's say you're a cop in Boston and you are offered a lot of overtime today, and you know that in order to make your budget work at home, you need to be making $200,000 a year. In this scenario, you might actually be incentivized to work less, right? If I can make $200,000 a year by working fewer hours and not paying taxes on that income, I might say, okay, well, I used to have to work 50 hours a week. Now I'm pulling it back to 42 because I get the same net pay when all is said and done.
Yeah, and I also would worry about businesses in terms of how they would shift their practices with employees to give them more overtime, or how employees would try to kind of rig the system to benefit from that tax-free treatment. I just don't know how you could fully incorporate that in. It just seems like there would be a lot of manipulation there.
It would be. I mean, to me, that's actually one of the least controversial ones.
Well, it just screws over the government, I guess.
Yeah, I mean,
it wouldn't hurt you as a business.
Look, with all of these, you have problems with Social Security funding and other issues in terms of how you pay for it that aren't being discussed at all. But in terms of purely like impact on the labor market, I have the least problems with the overtime pay one. I think the tax on tips is crazy.
That's probably a better example to highlight that there would be all sorts of chicanery done there on the tips front to get a lot more wages exempt from federal taxation. But I don't even know why we spend so much time doing these.
You just find it all unrealistic.
Go back to Biden getting into office and all the things we talked about him potentially instituting. It just has to go clear through so many hurdles, and I try to remind myself that when I'm trying to work out these complex potential proposals.
My counterpoint with that would be gifts to the American taxpayer are a lot easier to pass than penalties to the American taxpayer.
Sure.
And that's been proven time and time again. A lot easier to increase Social Security or reduce taxes than it is to stabilize Social Security and raise taxes.
Right.
A trust is an essential document that can help you protect your assets from the nursing home and potentially eliminate your estate taxes. Well, Cushing & Dolan are experts in elder law, estate planning, and asset protection, and this month, their new guide is called Demystifying the Top 7 Estate Planning Trusts, and it can help you learn about the various types of trusts that exist, the pros and cons of each, and ultimately which one will be best for you and your family. Trusts are a critical element to any solid estate plan, but the process can be tricky, and that's why it's important to understand the differences between the types of trusts that are available. Planning for later life is a challenging process, so don't leave your assets to chance. Call Cushing & Dolan right now by calling 866-848-5699. That's 848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Jim Covello is not exactly a household name, but he's Goldman Sachs head of stock research, and he issued a warning recently that, well, quote, building too much of what the world doesn't need typically ends badly. I find this article and this piece just interesting because it relates to a conversation Chuck and I were having yesterday, which is, you've got these massive subsidies in the United States for companies to build semiconductors. You had yesterday the United Arab Emirates courting Taiwan Semi to start building fabs there. I'm sure you have the same thing going on to a large degree in China, in Korea, obviously in Taiwan Semi, or in Taiwan itself, you have continued pushes. And I'd imagine places in India too, you have this push to start manufacturing semiconductors all across the board. And not exactly what Jim is referring to here, but I do see this scenario of the world assuming exactly what needs to be built, rather than markets dictating what needs to be built. And part of this is market-led right now. There is a shortage of advanced semiconductors available on the market right now. That's why NVIDIA has a month's backlog in order to get some, and you really can't unless you're a big customer. But historically, when governments have all said, oh yeah, we need to go out and build this, there's been a lot of instances of demise in the wake of those types of decisions.
It's a fair point, and it's an interesting conversation to have on AI. In general, I've been trying to spend a lot more time just trying to understand the industry as a whole, because it's complex and there's a lot of things that go into it. But ultimately, what this piece comes down to is there is trillions of dollars being pumped into this industry, into the semiconductor space and the development of AI. Some people you will talk to, I feel many in the technology space do feel that at some point the evolution of this will allow for enhanced productivity, but it's a fair point that Jim Corvell makes as the head of research from Goldman Sachs, saying that perhaps the productivity enhancements that are being baked in here are overly optimistic. We're really not going to know, to go against his point, we're really not going to know the fruits of this labor until 5, maybe 10 years from now. And I think the fair point to make is that valuations are significantly high, or priced to perfection for a lot of these companies out there. And it might take a much longer market cycle than Wall Street's comfortable with until we actually start seeing these enhancements reach everyday business.
Jim brings up another point that I find intriguing, and I'm just interested in your take too. But he brings up, hey, I was driving down the 101 from between San Jose and San Francisco, and he counted the billboards about artificial intelligence and found nearly 40 of them that he passed, which, between San Jose and San Francisco, I'm not surprised by that. And his point was, it was only a few years ago that these same billboards were all about crypto. And, he sees a lot of compelling similarities between the arguments made about crypto and those made about artificial intelligence. And I don't disagree with any of his assessment there. The piece that I do disagree with is that I never got to the point with crypto where somebody was able to concisely explain to me how there was a great business opportunity there.
I don't think, I agree with you. I don't think the parallels can be drawn as easily. I know he mentioned that in this piece, but the enhancements of AI are supposed to promise enhanced productivity, making things easier to operate as a business. Where did crypto come into play where there was going to be enhanced productivity that resulted from a digital currency?
I didn't see it.
There was none of that being mentioned. And to follow the dollars, which isn't always necessarily the right way to go, Fortune 500 companies are spending trillions of dollars on this development. I have to feel that the people who are very much smarter than me feel as at least there is some significance behind it. Now, the argument can be made against me. Yeah, Paul, but BlackRock and others spend a lot on the crypto space. I don't know if the dollars line up the same, though.
The other argument that I would bring up there is big companies spent trillions of dollars on the internet in 1999 and 2000. We still use the internet today. It is a massive part of all of our lives. There was inarguably a bubble in the stock prices related to the internet in 2000.
Definitely.
So, just because something is a successful technology that survives doesn't mean it ain't a bubble.
Right.
Let's take a quick break. When we come back, a bit of stack roulette here on the Financial Exchange.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network. The following is an important message from SAB Solutions Incorporated, your trusted advisor for companies needing inventory management. Visit them online at sabsolutionsma.com.
I'm Colleen Sullivan with SAB Solutions. Does your warehouse need help with tracking inventory? Are you dealing with customers who are bothered by missed shipments and stock discrepancies? At SAB Solutions, we've been a trusted advisor to a wide variety of companies over the last 15 years. We offer our clients customized solutions to track their inventory using real-time data and digital technology, and our barcode scanning capabilities will help eliminate manual processes, which are time-consuming, can cause errors and delay shipments. Don't let mismanaged inventory slow your business down. Our solutions will provide you with a competitive advantage, saving you time and money and allowing you to operate more effectively and efficiently. For more information and a no-cost assessment, visit us online at sabsolutionsma.com. That's sabsolutionsma.com.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
If you're approaching or have recently reached the age of 73, required minimum distributions should be a key consideration as you evaluate your retirement strategy. Hi, this is Mike Armstrong from the Armstrong Advisory Group. There are several factors to think about when it comes to RMDs, including the types of accounts that require RMDs, when to take your withdrawals, how your RMD is calculated, and the penalty for missing all or part of an RMD. That's what our new guide this month is all about. It's called Frequently Asked Questions About Required Minimum Distributions, and you can get your copy today by calling 800-393-4001. RMDs are a key part of your retirement strategy, so don't delay. Get your guide today by calling 800-393-4001. That number one more time, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Every single day, more than 2,000 U.S. companies face a cyber threat or attack. The Boston Red Sox in Fenway Park chose Centripetal as their official cyber network security partner to ensure the protection of their network and ballpark. Intelligence is the answer to protecting your network, and Centripetal is the global leader of intelligence-powered cybersecurity. The choice is yours. Are you going to be another one of those attacked companies? Or are you ready to experience a radical new cybersecurity solution? Find out why the Red Sox chose Centripetal at www.centripetal.ai. Trusts are essential documents that can help protect your assets from the nursing home. Call Cushing & Dolan right now at 866-848-5699 and get their free guide called Demystifying the Top 7 Estate Planning Trusts. Let them help determine which is right for you. That's 866-848-5699 or request the guide online by visiting their website at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Business and financial news affecting the markets and your wallet. We've got it all straight from Wall Street right here on the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John. Summer's over, so now's the time to start looking at a fabulous holiday vacation, and there's no better place than the U.S. Virgin Islands. Enjoy perfect weather, world-class dining, incredible beaches, and a vibrant nightlife. No passport is needed, then there's no money to exchange. Take your next vacation in America's Caribbean paradise, the United States Virgin Islands. Go to visitusvi.com to book your trip. That's visitusvi.com.
Paul, what do you have for us for Stack Roulette here?
There are some just universal truths out there, Mike, where these are just sort of messages or values to live by, whether it's the idea of, just trying to be friends with someone in a casual relationship that never seems to work out. You've got also this idea of buying a property with someone else that you happen to be friends with or not married to. Is just a cardinal sin in my mind. There's just so many issues that can come from both of those scenarios that I laid out. And there was a huge surge of this, to my surprise, in 2021 post-pandemic, where there's a piece in the Wall Street Journal where they highlight people who bought homes together with their friends, and surprise, surprise, now they want out, and all the logistical pains in the necks that you can deal with when you're up against owning property with, whether it's a boyfriend or girlfriend, that can get really dicey at times too, or you can go into scenarios with friends where, surprise, surprise, 3 years later, some of them want out. The piece that they highlight here is buying a home in Austin, Texas in 2021 with some friends, envisioning weekend getaways, lazy days at the pool, but only a fraction of the ownership. But of course, 3 years later, two of these friends want out, and then you have all the issues of buying someone's stake out. Just constantly the worst idea.
Just be an adult and get a timeshare. I can't think of few ways to almost definitively allow Murphy's Law to apply than by investing in a home with a good friend.
Why? What could go wrong?
Right? Like, I just...
We're friends.
You can see eye to eye on everything, and you can still have missteps here. And, I mean, even if this all went perfectly over the last 5 years, right? And, in this case, it kind of did. They bought it in 2021 at a low mortgage rate. It's basically doubled in value over the last few years, but one person wants out, the others don't. And now they're sitting here like, well, we can't afford to buy you out because I'm not going to go refinance the mortgage at 6.5%. So what do we do? And, you can imagine how a money issue eclipsing six figures suddenly could throw a bit of a wrench into a relationship. This is such a dangerous idea. And look, there's plenty of people that own properties that are not married couples, and I think there's degrees to which this is a bad idea. If you have a long-term partner that you've been together with for decades and you're not married, that's a different scenario. I would suggest that buying a property with a sibling is a less stupid idea than buying a property with a college friend. But in either case, it reads to me as total recipe for friendship disaster. And this not like this made up a large majority of real estate transactions over the last few years or anything like that, but there are going to be some uncomfortable conversations here over the next few years when it comes to this type of thing. And just, word of caution when mixing business with friendships.
Yeah, even the family angle too. You mentioned the siblings, but how many times do we run into situations where you have the lake house or the Cape house that gets passed down to the next generation and all the issues that arise from that, where siblings have different priorities and different lifestyles, and sharing a home with other families, it can be challenging. It can lead to a lot of disputes. So like you said, it's not a huge fragment of the market, but an interesting piece nonetheless.
It's just a good follow-up piece on a trend that I know we commented on in 2021. Like, oh boy, this seems like a stupid idea. I wonder how that's going to run down. And we have no evidence that this is widespread an issue that's out there, but I imagine it will be. Markets have swung into positive territory here with the NASDAQ leading the way, up nearly 107 points or 0.6%. S&P 500 up nearly 14 points, 0.25%. And the Dow Jones Industrial Average up over 50 points, 0.1% at the moment. That is all the time we have for today's issue of the Financial Exchange. We'll be right back at it tomorrow, folks, so we'll talk to you then.